Two Bulls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
Life-changing decisions can be hard, or they can be flexible, inclusive, and best of all, rewarding. Earn your master's in computer science, data science, or information systems at Northeastern University in the San Francisco Bay Area. No matter your experience, earn your degree. Plus, the desirable Bay Area is a smaller, collaborative campus, but connected to the huge Northeastern University. Discover the different technology degrees available. Visit northeastern.edu/pathways to tech.
Progressive presents Forced Metaphors about bundling your home and auto.
When you bundle your home and auto with Progressive, you get great savings and round-the-clock protection, which is as beautiful as looking your firstborn child in the eyes for the first time. Well, that's a bit much. Maybe it's more like looking your second-born child in the eyes for like the third or fourth time. Point being, the savings and round-the-clock protection are really, really magical.
Forced Metaphors, presented by Progressive. Bundle and protect today. Progressive Casualty Insurance Company and Affiliates. Discount not available in all states or situations.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome, everyone. Welcome to the China Shop. You made it. Get inside for another exciting interview episode. I'm Dan, your shopkeeper. With me, as always, is Kyle, creator of FinancialIneptitude.com. How you doing today, Kyle?
I'm doing pretty good. Always excited to get another Aussie in the shop.
Oh, we got another Aussie in the shop. We are proud to welcome Phil Muscatello from StocksForBeginners.com, or just Stocks for Beginners. Whichever, I'll fix it in post.
Yeah.
How are you doing today, Phil?
I'm really well. A bit cold, but yeah, really good. Thank you very much for inviting me on. This is a real pleasure and an honor to be on such a distinguished finance podcast.
Oh my goodness.
Did I read that script? Did I read that script correctly?
You nailed it.
Yeah.
Dan, are you sending people prompts when I'm not looking?
No, if it was me, it would be more about how good looking I am.
Oh, fair enough. Maybe
well, that's right. Sorry, I missed the part about how good looking you guys both are.
Yeah.
And,
thank you.
Yeah.
Just Dan,
how the babes find you.
Oh, this is fun already.
Why don't you tell us a little bit about yourself, Phil? How'd you get started with the podcast? How'd you get started investing?
Well, just before we do that, I just wanted to ask you a question because I've been doing some research into you guys and having swabs done. And I heard this the other day.
Next week, we'll be recording with Phil Muscatello, host of Shares for Beginner podcast. And on Monday, we're also recording the next installment of Back to the Futures.
Yeah, that's the big one right there.
That's the one. You can just edit down all the other ones or speed it up.
Yeah.
Wow.
I just wanted to say editing down, but you'll be hearing from my attorneys if this is over-edited.
We should have left that in there. I'm pretty sure I got.
Oh, wow.
Fair
Taste
enough.
of our own medicine. Wow.
Anyway.
To be fair, it's a tough act to follow the guys at Orderflow Labs. The following.
Oh.
Anyway, guys, back to me because this episode is about me, isn't it?
This is all you, yes. How'd you get that on the soundboard, by the way?
Look, my background's in radio, so I've got a lot of technical tools that I have at my disposal and a lot of experience in this area.
Dan might finally get his beef.
Yeah, right.
His beef.
He's been trying to start beef with somebody.
Yeah. Well, you're the one who said it. I just laughed at it.
Well, we'll see what we can do. Maybe mince.
Oh, okay. Nice. All right, so let's jump right into this then. And why don't you tell the audience why they should be interested in you more so than Orderflow Labs?
Yeah.
Look, it's a long story, and I mean, as I just mentioned, I'm from a radio background, media production background, music background, and so I didn't really have any experience in the stock market. Although for many years I've been investing poorly. And so I put together my radio background and, which gives me the skills to make podcasts. And I've always been a bit addicted to podcasts even before they became the thing that they are now. And I was looking around for ideas for podcasts, and then I just suddenly had this thought, which obviously resonated with you guys as well, is that maybe I could improve my own investing by talking to experts in the area. And that's how I started. And really, I had no idea who I would be talking to and what kind of guests I would find. But then I found so many people wanted to come on and share their experience as well.
Isn't that weird?
Yeah, it was. I mean, I get this undue respect now as a podcaster. I'm not sure if you guys have felt this experience.
Not as much as you, I'm sure, but we get a little bit, enough to surprise us.
Oh, don't worry. It'll come. It'll come.
Yeah.
But so I started a podcast called Shares for Beginners in Australia. And I think the SEO on that was really good because people, if you put shares in your podcast app here, mine is the first one that comes up. So I thought I would give that a go in the United States as well. So I created Stocks for Beginners, invited a whole group of guests on to come on that. And now again, seem to have this undue respect in the finance industry or certain sectors of the finance industry in the States and have no trouble finding guests and trying to beat them away with a stick at the moment.
Right. I think that I think that people in this field are people that try to seriously trade. They just want to give back. It seems like it's part of everyone's nature to try to give back to the community. There's so much free information out there, and they're all like open books. They always want to share.
Well, I think there's that. But I mean, obviously, there's people who want to sell something. They've got a book that they want to sell, or their product, or their service, or their trading service. But I was actually interested in you guys, and your approach, and how. So it is actually trading rather than long-term investing that you guys are interested in. Is that the case?
That's what we're trying to learn. That's not to say that we don't hold long-term investments. I think. One of our first guests told us that every trader eventually becomes a long-term investor. That's the ultimate goal of trading.
Yes,
but yeah, that is what we're actively trying to pursue. Is to learn how to day trade or swing trade or more shorter term scalping, that kind of stuff.
Yeah, because that's the journey. Oh, don't you hate that word, journey? My investing journey.
I love that word.
I want to call it the Camino, the investing Camino.
It's more like the Trail of Tears.
The Vale of Tears, that's correct. Because I did a lot of that and researching what you guys are doing as well. I noticed that you have had an interest in covered calls, which was my gateway drug into options trading. And so I've done quite a bit of options trading over the years, but really what's changed for me, and having spoken to so many guests and so many experts, is to have the core satellite approach where you just basically have your core of ETFs. I mean, I've got, ASX 200 Australian stock market 200. I've got an S&P 500, some bond ETFs and so forth. But then my trading side of it is only just very, very small and to the edges of it. And one of the main things I learned, one of the best things I ever learned from a guest, and it really resonated with me, is match your risk to your experience. And those words have just changed everything for me. And I wish that when I first started that I'd known about that. And sorry, I've got a few things grinding my gears here. Do you mind if I rabbit on a bit?
No, please do. I do want to comment on the risk management portion, but
there isn't. Okay, well, let's talk about risk management, please.
Well, my question is, if the information was presented to you when you were first starting out, do you think it would have made a difference?
Oh, definitely. Well, I had no idea about risk management, none whatsoever. I mean, now I know about putting a stop loss in place, for example, which would, help you to manage your risk. But that's the other point I was going to make, is just trusting people. You can't trust anyone. And I unfortunately got into the hands of a broker, and not realizing, being, much younger and much more stupid than I am now, that our interests were not aligned.
Was this like a person, or are you talking about just a platform?
No, a person.
Okay.
I mean, I've been around for quite a while, so this was when there was not so many brokerage accounts, and it was much more expensive to trade and so forth. Yeah,
I do have a question for you. Then, do you remember the office that the broker worked in?
Yes, very, very lovely view of the Sydney Opera House and the Sydney Harbour Bridge and the harbour.
What was on the TV, and how friendly was the receptionist?
The receptionist was very friendly. The lunches he used to take me out to were very, very nice. I don't remember what was on the TV. Why would the TV make a difference?
Well, I guess a brokerage is different than a financial advisor. We just had a guest on that told us some red flags to watch out for. So if the receptionist doesn't care or is gruff or anything but very, very friendly, that's one red flag. And if they're displaying like Mad Money or CNBC instead of like Home Life Network on the TVs, then that's another red flag.
Oh, okay.
I was just curious if there is a correlation there.
No. This was all very, very flash. But this was a brokerage. This wasn't financial advice. This was a brokerage. Okay. And so I didn't really understand the difference, and I should have.
Right.
In fact, one of my guests, Stanley H. Teitelbaum, who I would highly recommend you get on your podcast as well. He's a psychologist, and he's got a great piece on financial advisors and the 7 questions you should ask a financial advisor.
Are you crooked? That's at the top of my list.
Well, the first one is when they're presenting you with a list of investments, to ask them, do you invest in those? And if not, why not?
Oh, right. Also, what sort of commission do you get for me investing in these?
Oh, yeah. Well, that should be one of the basic ones, of course.
I know, right?
People just don't know about that.
It's funny, the psychology aspect of trading, as you mentioned, the Stanley and the psychology. Like, did you ever realize how much of that was going to be tied into trying to learn how to trade or invest or just in general?
I had no idea. I had no idea about how much psychology was involved in it, and the fear that you would feel, the greed that you would feel. And again, Stanley, I'll just refer back to Stanley because I got so much from this particular episode. The one emotion that I never realized that would play so much in investing is shame. Have you experienced shame?
Yes, because I'd say open books with our trading. Like I post all my trades in the Discord. So if I make a stupid decision, then everyone gets to see it.
Yep.
I also put my journal entries in there too. We have a recurring segment too that focuses on the dumb stuff we did in the past week.
The Book of Shame.
Yes.
Actually, that'd be a great segment, wouldn't it be? The Book of Shame. But really, shame for me, has been a real eye-opener, just realizing, first of all, the shame of failed trades, and the shame, looking back with shame over what you've done, and thinking about how stupid one has been in the past. And yeah, that's something I've really had to overcome.
The other aspect of that too is just seeing all the gain porn on, pardon my French, on Twitter and Reddit and StockTwits, like the peoples who YOLO, their life savings into like weekly options and then posting their million bagger gains. Like, okay. And then you tried to make a smart trade and then you're sitting there like, trying to scratch your head, figuring out where it all went wrong.
Well, it's also, you get lucky, very early on. And I got lucky with one options trade. I purchased a call option, which overnight jumped over, I can't remember. I think it was like a $1,000 investment that went to $15,000 overnight. And, you can imagine how great that feels. You take your buddy out to lunch the next day and then you realize how hard it is to repeat that kind of thing without any, and especially when you have no plan. You're just working on blind tin-ass luck.
The real question is how much did that $15,000 win actually cost you?
In terms of?
Well, now you've got a little bit of confidence. You've made a trade that worked out, and now you're going to be chasing those returns, thinking that you're trying to find the next one. So how much? Like I find that like the big wins, I think, were more detrimental to my growth as a trader.
Yep. So what is your particular style of trading? Is there any particular style of options trading that you that you follow?
I stick more to the swings. I like the couple weeks to a month out. I like the selling options premium.
Yep.
But I don't do as much of that as I have. I've been focusing more heavily on futures lately, as we've been doing the collaboration with the aforementioned villains of this episode.
Yes. I've been doing the options trading with the day trading on the options.
And what do you use? Do you use technical?
Yeah, all technical analysis for sure.
We're definitely mostly technical analysis. I think we've talked to some people who use fundamentals, but I haven't personally studied them all that much. I mean, I know how to read a balance sheet and that kind of thing, but
show off.
Well, I mean, not well. But to me, it all comes down to the price. Like when you're trying to figure out whether something's undervalued or overvalued, like it just seems meaningless when there's a competitive auction taking place every day that's telling you exactly what the value of this asset is right now.
Yeah, it's incredible technical analysis, isn't it? I mean, before we came on, I was just looking, we're recording on the 23rd of August, I believe.
Yes.
Yep.
It's the 24th here.
I was going to ask.
I was just having a look at the S&P 500 chart, and what a perfect candle. No, sorry, not a candle. It's what's it called? A shooting star. Is it a shooting star today that's being formed in the candle for the S&P 500?
Oh, what is the one at the bottom? I thought isn't
setting up a evening star.
Evening star.
It's an evening star at the moment, isn't it? It's like one of those holding patterns, the market doesn't know whether it's going to go up, it's going to go down. We're right on the verge of a bull or a bear market, aren't we?
Right.
Yes. This is true.
Well, it's really interesting too, is look at where we actually stopped on those rotations. Look, if you look at the daily chart, you can see where we've been rotating in this spot 2 times before.
What does that mean? Can you explain that to me?
The rotations?
Yeah, rotations, yeah.
That's just a tight range that price has been bouncing up and down in. So,
okay. Yeah.
Trying to find balance.
Yeah.
Range trading.
Yes. So those balance areas tend to be magnets. If we were to lose this balance area, which is the bottom somewhere around like 407 on the S&P, you can expect us to try to make a push down to the next one.
It's I love the idea of technical analysis, and I love studying it, and I love looking at charts. To me, that's where the psychology is reflected the most. Do you find that?
I mean, the technicals are basically, they work because of market emotions, right?
Yeah, that's why they work.
I mean, I've got so many different indicators that I've used, but since becoming a bit more long-term with my longer-term holdings, I found this one great chart that was pointed out by another guest on the podcast. And it's very difficult to talk about charts in an audio format.
I know, right?
I know. But if I can just draw you the picture that it's a 5-year chart using line, okay, no bars or candles or anything, just using line only, on a monthly time frame. And when you look at that chart and then just basically draw 2 lines, you get such a great overview on the long-term overview on a particular stock and where it's heading. It's it's been fascinating. And so I think sometimes it's also good because I know day traders and people who want to trade, you're looking at, I don't know, do you look at 5-minute charts or you're looking at day charts?
Wow. To do it right, you should be starting with at least a weekly chart and working your way in. Even though as a day, if you're trading on the day trading time frame, levels that you care about, maybe the long-term investor doesn't care about, but you better damn well sure that the long-term investor doesn't care about your little intraday levels. If you come up into a level that's interesting on the weekly time frame, it doesn't matter what you found on your 5-minute chart.
That's really interesting, isn't it? And I think that's something that listeners who are interested in technical analysis should be aware of, that the different focuses that you can have on charts. And it's really worthwhile going out to 5 years, even 10 years, I think, in so many charts.
So what style do you invest with? Like what do you, like when you look at a stock and then you decide, like how do you make a decision that this is something that you want to invest in?
Well, like I said, I'm mainly invested in ETFs at the moment.
Okay.
And I'm not a great fundamental researcher. I'm really not a great fundamental researcher. So I basically follow what other people are doing and try and accumulate in my, well, we don't have Roths or 401ks, but the Australian equivalent, trying to accumulate very good large cap stocks in the portfolio at the best kind of times. My trading, what I do for trading are credit spreads. Do you know credit spreads? Yeah. On ASX 200.
You can explain that if you want for the listeners, though.
Yeah, ASX 200 futures, basically. And I do that with my new broker who's got my much more my interests at heart. So a credit spread is when you say you think the market is going down, so you sell a call option and then you buy a higher option as protection. So basically, you're going to get the premium. You're not going to get as much premium because you've bought yourself protection at a higher level. And you're hoping that within 2 weeks, 3 weeks time frame that you've bought this, that both these options will expire worthless and you get to keep the premium. Is that a good explanation of a credit spread?
I think so. It's just it's like we just talked about this, didn't we, Dan?
Yeah, with the options AI CC Lagator.
Yeah, it's the opposite of the vertical spread. It's basically selling it instead of buying it.
Yeah. So that's another thing. I've never done the vertical spread. How does that differ?
Instead of like, whereas you'd be selling the one and then the less expensive one, you'd be buying that one to cap your protection. It's the opposite of that. You'd be buying the more expensive one and selling the less expensive one. And what that does is that helps kind of offset some of the volatility that's priced in.
And the cost.
Yeah.
It caps your gains, but it also reduces the cost of the options contract to begin with.
Yeah. So you referred previously to selling contracts or buying, trying to get the premium in. And in what form do you usually take that? Sorry, I'm not sure. Is it Dan or Kyle that's doing that?
That's me, Kyle.
Kyle.
I like to just sell against just some of the assets that I have in my account just to generate a little bit of extra income. So I'll look at like when it gets to a good level where I think like, oh, okay, this is at the top of rotational area or this is at a key resistance level. Then I'll sell at the money on a monthly. And then next month when it comes time for that to either expire or if my shares look like they'll get called away, then I'll just roll it to another month.
So do you have to have collateral to do that?
Yes, you need a margin account for most of them. But I think, Dan, you have a you have a cash only, but I think you could still sell covered calls because they're covered by the stock, right?
Correct.
But if you were to do something like you can't sell them naked, or you couldn't do some of those. Can you do the spreads on your account too?
No, I would need margin for that.
Okay.
Yeah, of course. Yeah. So covered calls, I just referred, that was my gateway drug earlier on in our discussion. And covered calls, to me, they seemed like a no-brainer that you hold the stock and that you sell a covered call a bit higher. And if you're called in, that you will just have to sell the stock for a profit, which seemed like a very risk-free deal. But then if you get onto that treadmill, I find you have to keep on buying stock. And then if the stock goes down, that income doesn't come back at you. Do you find that?
No, the nice thing about if your shares get called away, then you can just turn around later and sell a put and use that to re-enter.
Oh, okay. All right. See, I didn't have that plan. That's brilliant.
That's how I think Warren Buffett is a big proponent of that. Like if you want to buy shares of something, just look at the price point where you'd be really happy to own it and then sell a cash secured put. Because if it goes down, then you're happy. If it doesn't, then you still get the profit.
Yeah. Well, that's brilliant. He's brilliant, that Warren Buffett, isn't
he?
He knows a thing or two. Go figure.
We've been trying to get him on, but we don't have quite that much clout yet.
Well, you've had some pretty impressive guests, though, going back and having a look at it.
I think so.
Yeah. Who was your favorite guest?
Phil Muscatello.
Oh, you guys.
I gotta say, I think Rich Friesen.
Mm-hmm.
He's our psychologist friend.
Yeah, he's good.
Yeah, he taught us quite a bit of stuff about ourselves. I think we actually did some like therapy sessions on air. He sat us down on the couch and then kind of like walked us through like some of the issues that hold us back in our trading selves.
So how did you come into this? You guys come into this yourself? Did you have a similar experience to me? You know, just interested in it, but bad at it?
I actually got into it when I was about 13 years old. I came across this book on drip investing, dividend reinvestment plans in the 90s.
Yeah.
And I was like, this will be my retirement. Here I am. I got a check from grandma for my birthday. I got a little bit of cash saved up. I think I had like $300, which was so much money to a 13-year-old dam.
Yeah.
And I went and I just arbitrarily, I was like, hey, utilities companies, they seem safe. Everybody's going to buy electricity forever. And I went ahead and I bought some of a Midwest utility company, dividend reinvestment. I had it for years and years, and it was growing. I think it was got about 10 times it got to about $3,000 some dollars when Enron happened, and it just crashed the whole utility sector. And they discontinued dividends. They discontinued the dividend reinvestment. And I just got discouraged, and very typical retail beginner, not knowing anything, sold. And then that money's long gone. That was my first taste into the world. If I'd known now, then what I know now.
Yeah. If you know now what you know now, you'd be still holding and be laughing right at the moment, I'm assuming.
I would. I really would.
The podcast itself got started because you sent me a book, Dan. What was that? It was one of the Darvis books.
Yeah. How I made like with $5 million in the market in the 50s.
I think the podcast kind of started with just a phone call. We were talking to each other about once a week or almost every day, I think, at that point. And then we thought,
we got in the thick of it.
Yeah. Thought, hey, maybe people want to hear what we have to say or what we're learning.
Let's try to actually learn this.
Yeah. 2 years later, we're still trying.
Still trying to learn.
I know. It's terrible. You keep on making the same mistakes, don't you?
And then you tell yourself never again, and then you do it again, and then you tell yourself never again.
Yeah.
I'm never going to overtrade and trade outside my levels, Kyle. Never, never, never.
I know, right?
Not until tomorrow when the market's open again.
I'll tell you what, though, the more that we've learned and the more that we've defined our strategies and our plans and put that down to actual paper, like those mistakes have been coming fewer and fewer between.
Yeah.
Yeah. Oh, that's good. It's good to hear. It's good to hear that you fellows are growing.
That's why I asked you at the beginning about risk management, if you thought that that information would have been helpful to you.
Yeah.
We were really blessed to meet George Papazov from Trade Pro Academy. He gave us access to all of his course material, maybe like 3 or 4 months into the podcast. And now all the stuff that I'm learning, I'm going back and like, I wish I knew that then. And I'm looking at the course material like, oh shit, he taught us all that. I just didn't know what it was. I didn't know what it meant. I didn't know how to.
You didn't have the context.
Yeah.
I think we're just so blessed at the moment, I'm old enough. My first trade was actually where I walked into a broker's office and he suggested a stock to buy. And I said, okay. I handed over a check and, he wrote it down on a piece of paper and gave it to his assistant who went down to the stock exchange where they were still using chalkboards, none of that sort of vintage when I first did it.
Well, that wasn't that long ago though.
It was the late 80s, I think, around about 1988, something like that.
Trading Places, about that time?
It could have been. Yeah, it could have been about that sort of time. And today, people can get so much information. I mean, obviously, there's going to be some poor information. There's some good information. Hopefully, both of us are trying to give what we see as good information.
Yeah.
And there's so many mistakes that you don't have to make if you listen just to a few sensible voices to get you going. Don't risk too much. Single stock shock. That's the other one that another guest said.
Oh.
Don't be ever caught by single stock shock.
What does that mean?
I need a T-shirt with that.
Can you explain that?
Well, just owning one particular company. And then if you get burnt by that company, that you're going to be hit by that shock and you won't never want to go back into the markets again.
Yep. Diversification.
Mm-hmm.
Hear a lot of people talk about that one too.
Yeah, but you don't want to be too over-diversified either, I don't think.
Right. You know, one of the things that I saw, and I was looking through your website, is on the getting started for the shares for beginners. And I really like the message that you had on here about taking a look at yourself and then deciding whether or not you really want to put the effort into trying to learn everything. Or if not, just purchase ETFs. I think that's a message Dan and I have been preaching since we started this as well.
Yeah.
Well, I think many people just have this idea that they're going to be a stock market wizard. They suddenly hear about the stock market with no idea what's going on, like, I did, and think that they're going to make a shitload of money.
Right.
And then they get completely burnt and wasted by it. I mean, you've just had it over in the US last year with the GameStop saga, and one of my recent guests was a journalist at the Wall Street Journal who's written a book about that, The Revolution That Wasn't, where he actually showed and demonstrated how the only winners were still Wall Street out of that.
Right.
Where all those Reddit warriors, the bored apes, all thought that they were, taking over Wall Street and getting one up over Wall Street. But really, in the end, Wall Street just won again, as they completely do. But anyway, I was just going off the topic there just a little bit. I think you've really got to spend a lot of time to understand whether you're going to be day trading or whether you're going to be investing, whether you want to buy individual companies and invest in them. You have to put the time and effort into it to do it well. And it's like a language. You're not going to be proficient in that language overnight. It's going to take years of practice and learning and education before you can be halfway good at it. You can get lucky, of course, but that's not good for long-term investing. And then if you just realize the kind of person you are, if you just sit back and think about it for a minute, and whether you are interested, like I said on the website, if you know yourself truly and you realize that that's not who you are, there are so many options for starting out, even micro investing. You can start with $5 and just invest in a range of diversified ETFs with very, very little money these days. And again, this is one of the great things in this world that we live in, that fees have gone down and access to markets. The big fund managers have realized, in the past they were only interested in very rich people with lots of money, but they've realized, well, they can actually make a lot of money out of lots and lots and lots of small accounts as well. And it's of such benefit to investors.
Well, didn't the banking industry have a similar revolution at some point in our history where they used to be for the rich and then they realized that, hey, we can
we can screw the poor as well.
Yeah, exactly. It's not quite what I...
No, not quite that. Yes. We love the banking industry.
No, we don't. This is backtracking a little bit, but I actually had a revelation, or an epiphany, I guess you could call it, myself not too long ago. Like, for the people that think that they're just going to jump in and learn how to trade and be brilliant at it right off the bat, like, you have to think about where the money that you're making comes from. When you're trading, there's no, like, the stock market isn't like giving you money. It doesn't hold money. Like, you're making money off of other people's losses. Like, somebody's on the other side of your transaction. Like, when you're pulling equity out, you're pulling it from somebody.
Yeah.
So you really have to be good, at least better than half, you would think, right? In order to be able to make money consistently. So that means putting a lot of time and effort into doing it.
I don't really get that zero-sum game idea of it, because people are people are trading, especially when we're talking options, for different reasons. So I don't think necessarily the other side of the trade is losing if you're winning, and vice versa.
Long-term investing, I would agree, because there's other things that go into making more value for the company. But as a day trader, I would think that would play more of a role.
Are you going all ESG on me, Kyle?
ASG, what does that mean?
ESG, environment, social, governance, ethical investing and all that.
Oh, no. I don't care about the ethics. I'm talking about like why I need to be good.
I think ESG is important because we've got to think about the kind of world we're going to be leaving for Keith Richards.
You think he's going to make it past? He's never going to die?
Never. Undoubtedly never.
He's already got a robot body.
I was gonna say you've talked to quite a few people on your podcast as well. Like, what are some of the other key like things that stuck with you, like through the different guests that you've spoken to?
I knew you were going to ask this, and I should have researched this a little bit better because psychology's been the biggest one. Mm-hmm. And with all my guests, I love all my children. But I do. You always love one more than the others.
You don't say it though.
No, they're not to their face.
Not there.
Although you are my favourite guests if we simulcast this, which I think we will because we are actually getting through some interesting material here. For us anyway, that's the main thing. Mm-hmm. I think it's just overall, the biggest realization overall is that when we're sitting down trying to research, whether it's doing fundamental or technical research, and then you realize when you speak to a fund manager that the resources that they have at their fingertips is so much more. Mm-hmm. They've got teams of people. They've got argument with each other. They've got, computer programs which will do it. That you just realize that, and most of them don't even do better than the market anyway,
right,
with all of those resources. So that's a key thing to understand that. Well, first of all, you're not going to be able to compete with them on the resources that they have. And even if you did have those resources, you mightn't outperform as well.
Right. Well, that just goes to show why the differentiation between successful and unsuccessful is all to do with psychology.
Yeah, that's right. And being able to manage your own psychology. And I guess it's also realizing the people that have made me realize that you just have to be so careful